jumping straight to hell. Leverage high, nerves are fried, but I'm in too deep to bail. Yeah, tries to bleeding red tsunami, bought the dip, hello tsunami. One more contract, double down, now I'm hanging by a thread. I was chasing tickets like they owe me rent. Now the brokers knocking saying pay your debt. I was diamond in it, but my hands got wrecked, and my P&L looks like a fucking mess. I was one bad trade from a margin call meltdown. Lost it all fast, now I'm spiraling down, down, down. One dumb bet, now I'm out of the game. But I'll be back next week, still ain't learned a thing. Took a loan, maxed the bet, thought I'd ride it rocket jet. Now my balance looking like a post-crash cigarette. Saw the news, bought the hype, should've known it's all a grift. Now I'm back holding the stock like it's my only Christmas gift. Tried to hedge, got wrecked, tried to pivot, lost the bet. Took a swing, caught a knife, now I'm drowning in regret. Told myself I'd play it smart, just one more and then I'm through. Now I'm outside in the rain, screaming please just break even, dude. I was chasing tickets like they owe me rent. Now the brokers knocking saying pay your debt. I was diamond in it, but my hands got wrecked, and my P&L looks like a fucking mess. I was one bad trade from a margin call meltdown. Lost it all fast, now I'm spiraling down, down, down. One dumb bet, now I'm out of the game. But I'll be back next week, still ain't learned a thing. I was one bad trade from a margin call meltdown. Lost it all fast, now I'm spiraling down, down, down. One dumb bet, now I'm out of the game. But I'll be back next week, still ain't learned a thing.
Oh, brother, oh, brother, oh, brother. Good morning, good morning, good morning, and welcome back to another episode of the Matt Kohrs Show, where I'm Matt Kohrs, and you folks are the show. It is a beautiful Monday, April the 20th. Happy 420 to all who celebrate. I hope you are ready for a very, very green Monday. Folks, I hope you had a fantastic weekend. I hope you were able to wrap up the week pretty strongly on Friday. I know a lot of people in the Goonie community were making a lot of money, one type of green. And then from there, I hope you had a restful, relaxing weekend, and hope you're ready for another full, fun week here. I'm in the market. I know we have some news from over the weekend. We're going to be covering that. Yes, when the futures market opened at 6 p.m. last night, East Coast time, we had oil spiking. We had the market dropping, which is setting up a NWOG, a new week opening gap. And actually right now in real time, I am personally playing that, but I'm playing it a little bit more conservatively. I just want to show this to you because if in my intro you hear an ordered filled type of a situation, you know that that is me trading. Why is this not right? Okay, that is not right.
Order canceled. Order submitted.
There we go. Okay, I wanted to take all my risk off the table. I'm looking to lock in a quick $1,000. That's the goal. If I could hit that, maybe I'll keep trading on the day. Maybe I won't. It's one of those things that, hey, the market's not even open. If you can make $1,000 across all of your accounts and you could be done, like, it's a good start to the week. In my mind, it gives you a lot of positive momentum. So if this locks in, and it might be locking in pretty soon here, I don't know, man. I'm liking this concept. I'm liking this concept of maybe just being done for the day, being done before it even starts. Now, I do want to let you know that I picked this number. I don't see anything special at 780. I do not at all. For me, it's more of, hey, I got in at 26 and that makes me about $1,000. I don't see a technical level there. I don't see a gamma level there. I don't see like psychological resistance or anything. Like, it's just 80 is literally a way that I get $1,000. Now, referring to that NWOG, the new week opening gap, this is a well-known, very popular trading target level. You look at where we close at. See how we opened all the way down here? We opened at, what was this? 26,600, we'll call it. It's 599.75. But the issue there is we closed at 840. So a lot of people right at market open, when things settle, well, they like to throw on that long position and play it all the way up. So once again, I'm undershooting it. I'm looking for 780. But if you wanted to play it in a purely like regimented, systematic manner, you would be looking for 840.75. Once again, the closing value from Friday. So just to clarify exactly what it is, and to let you know that I'm deviating ever so slightly, trying to lock in my profit a little bit earlier. Now, if I were trading multiple contracts, what I could do is roughly right about now, lock in one, guarantee myself some money before market open, and move that stop to break even. And then either it gets stopped out for break even on the second contract, or I get to play it all the way up to the upside gap fill. That's another way to do it. So there's a couple ways to think about it. For me, I just want to be clear. I'm playing it in a bit more of a conservative way, kind of just playing the account and hopefully making that money. But if you wanted to play it like a perfect robot and you're like, nope, this is the system, I stick exactly to the system, you'd be riding it all the way up. Basically, you would have gotten in either right at open, or maybe when it showed a little bit of a pump, maybe taking out that first minute, like 10-minute Orbo or something like that. So you're either in at like 660, you're in at 600, you're in somewhere down here, you're already up pretty nicely, and you are clearly targeting 841. And unfortunately for me, whoa, what is going on? I was going to say, no way. I was going to say it's coming for me. Go, 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 go.
Order
hey, filled. America is good.
Order canceled.
Brother, wait, let me make sure I cancel all the orders. Bing, bang, fucking boom. What are we even doing? Why am I even doing this prep show? Why the fuck are we even talking about any of this boring ass news? Is this straight open? Is it not open? What's going on? Who cares? Money locked in, $1,000 per account. You might be thinking, but Matt, why did you only make 200 on Legends? Well, I traded that actually at market open last night. Once again, futures market open, because I only needed to make $200 to secure myself another $12.5 thousand payout. So I'm already way off where I need to be today. But just to explain it, right here, I needed one more trading day. You need 7. I had 6. And a trading day is a profitable. You have to have 7 profitable trading days, which is defined as $200. So that's exactly why I made just over $200 to lock in day 7. This will all update at market close today. I'm good on consistency. I have enough net P&L. Obviously, I did that on all 5 of my Legends accounts. So this will be my first payout on Legends. Hit everything I need to. I'll be able to take out 2.5K from each one. 5 times 2.5 is another 12.5. So not only did I lock in $1,000 on every account, but I also secured a 12.5K payout on Legends. So I'm feeling pretty freaking good about it today. I'm feeling real good, but I don't know what that pop was, but I am not going to be complaining at all. It's a little bit of a bummer because I could have had a pending order at 800 and I would have made another $400 per account, but hey, coulda, woulda, shoulda. Coulda, woulda, shoulda. All right, like I said, I know I'm all over the map this morning. It just so happens that the market's already moving. So let me take a step back and prep you guys up for not only this week, but also today's specific trading session. While I'm doing this, if you guys haven't already, it would be a massive help if as you're joining in, as you're getting your cup of coffee, as you're doing whatever you need to do, if you guys could smash that like button. I'm saying assault it, violate it, curb stomp it, do whatever you need to, but make sure that like button knows you were here today. Also, obviously, don't forget to subscribe and turn on those notifications. And with that in mind, stock futures fall on renewed U.S.-Iran worries, but losses keep in check. Really not that bad. So we are currently down 0.3%. The Qs are down 0.23, so technically we are in the red relative to where we closed out on Friday, but obviously we have definitely seen much, much worse, and it's all because of renewed tensions with Iran and the U.S. Stop me if you've heard this one before, but the strait has gone from being open to close to open to close to open to close to open to close to open, and we all thought that this might be the final one. But then over the weekend, surprise, surprise, it is closed once again. Gunfire, U-turns, and threats mark a chaotic weekend in Hormuz. Honestly, that headline would just fit in my normal life. You could say gunfire, U-turns, and threats mark a chaotic weekend in Matt Kohrs' life. Like, that's... I live the same life as Mr. Hormuz here. I really, really do. Now, obviously, I want to be getting into all of that, but since it is the start of a new week, let me take a second to remind you about seasonality. This week and last week, we're both favoring the bulls. We're kind of in this portion of April where generally the final portion of April is strong. Remember, May is generally a nothing burger, and actually so is June. But by the time you get to the end of June, that's when you get into a little bit of a summer push. So there is a little bit of positive seasonality right now, which is probably a nice thing to hear, especially when you consider that we're at all-time highs. This is based on the last 20 years worth of data. If you look at the last 5 years worth of data and go into weekly, right here, last week was positive. We're about to start a positive week. And if you look at the last 3 years, same thing. Last week was pretty positive. Next week, or this week's, excuse me, the blue one is about to start at 9:30. It's going to move over right here. So just wanted to show you the seasonality based on the last 3, 5, and 20 years that the final portion of April, not all of the time, but majority of the time, it does pay to be a bull. So this time around, you could fairly argue, okay, yeah, I'm going to trade seasonality, or you might be thinking to yourself, Matt, I don't care about seasonality at all. It obviously just exclusively depends what's going on with Iran. And hey, that's a fair pushback, so let's cover what's going on there. Trump says Iran talks are on, sparking a push to bridge gapping divides. The president warned Iran of further attacks if it fails to agree on a deal to end the war. I felt as if this was a pretty generous headline from the Wall Street Journal, because other headlines are pretty harsh in terms of the severity of the situation. Resumption of hostilities. Seas ship, vessel attacks push U.S.-Iran ceasefire toward a brink. This type of a headline has a lot more to do with why the overnight session had a pretty large gap down. Granted, we are getting it back, but to literally no one's surprise whatsoever, President Trump is already responding on Truth Social. If you are trying to actively trade and you're not monitoring the situation, aka Trump's Truth Social, folks, you're going to be behind on news. No, wait. Noise? Whatever. Clearly, I haven't taken my nootropics this morning. Iran decided to fire bullets yesterday in the Strait, a total violation of our ceasefire agreement. Many of them were aimed at a French ship and a freighter from the UK. That wasn't nice. Was it? Representatives are going to Pakistan. They will be there tomorrow evening for negotiations. Iran recently announced that they are closing the strait, which is strange because our blockade has already closed it. So it's like kind of that vibe of like, you can't fire me because I already quit. They're like, how can you shut down something that we already shut down? Basically, this is a way, in my opinion, for President Trump to save face and be like, yeah, you weren't supposed to shut it down, so I'm going to scream that you can't shut it down because we already shut it down. It's a 5D chess move. I appreciate it. It's definitely the art of the deal. They're helping us without knowing, and they are the ones to lose with the closed passage. $500 million a day, $500 million, half a yard a day. The U.S. loses nothing. In fact, many ships are headed right now to the U.S., Texas, Louisiana, and Alaska to load up on compliments of the IRGC, always wanting the to be the tough guy. We're offering a very fair and reasonable deal, and I hope they take it, because if they don't, the U.S. is going to knock out every single power plant and every single bridge in Iran. No more Mr. Nice Guy, because before this, he was being Mr. Nice Guy. They'll come down fast and they'll come down easy, and if they don't take the deal, it will be my honor to do what has to be done, which should have been done to Iran by other presidents for the last 47 years. It's the time for Iran killing machine to end. President Donald J. Trump. So this was the update as of yesterday morning, roughly 24 hours ago, 23 hours ago, 25 hours ago, actually. So that's where things currently stand. Obviously, I'm expecting quite a bit of movement and development today. So a very dynamic, fluid situation. Hormuz traffic at a standstill after U.S. Navy seizes an Iranian ship. So in terms of, I guess, like overtures of conflict, it is obviously getting more serious. So for everyone involved, which is really the entire globe, hopefully it just freaking stops here. So obviously I fully understand that when there are lives at stake, that is by far the most important thing. But the fact that we're here to talk about the economy and the market, some of you will probably understand that oil prices jumped after Iran and U.S. attacked commercial ships. My apologies. I don't know if you guys heard that, but I just had to sneeze. Anywho, oil prices jump after Iran and U.S. attack commercial ships as tensions escalate over the strait. So right here, oil back up to 86. It was as low as 78. So a decent jump. It's up 4.6%. If you ask me, oil, it's going to be a lower high and it's going to collapse. I think this is just a dip to be bought in the market. That's just one man's opinion. I know I say you shouldn't predict, and I'm attempting to not predict, but just kind of going off how this entire saga has been playing out. Clearly, the dips are to be bought. Iran wavers on peace talks as tensions rise after the U.S. seizes a ship. Like I said, pretty freaking big deal.
What's your read on the situation and the extent in which this maybe moves the needle in some way and tells us more about what Iran has in terms of leverage versus maybe what the U.S. has at this stage?
Well,
Kind
I
of
mean,
cleavage.
definitely the seizure of the Iranian ship has complicated the situation that's already complicated. And already we are hearing from the IRGC, the Iranian Revolutionary Guard, saying that they are going to respond to this latest escalation. So for Iran, the question is going to be the window of time. How much can they continue with this war for both parties? I think we are hearing competing narratives now from both of them about the talks. The Americans are saying they're sending their delegation to Islamabad on Monday. Immediately after the announcement, the Iranian IRGC
that was the most goofy movie sneeze I've heard this year. Oh, I thought I hit it. I thought I made it pretty quiet and muffled. My apologies.
A news outlet basically said the Iranian delegation might not be going to Islamabad, and so and as your reporter said, we have a ceasefire clock that is running down fast, and the level of tolerance of both parties for continuing to wage this war is different. I think the U.S. maybe has a 2-3 week window. After that, whatever happening in the oil market is going to affect and impact the U.S. Whereas I think Iran thinks that they can sustain this war for 2-3 months. And Iran wants to consolidate whatever victories they have achieved in this war, including control over the Strait of Hormuz. And the U.S., especially the president, need to get a win before, quitting, before finalizing this. And particularly the win is in the nuclear field, both on the enrichment side as well on the highly enriched stockpile that Iran has.
All right, I want to pause it there because does anyone else find it odd that, okay, so right there, Rhonda Slim of the Slim Fast family. That's where they got all their money from. And then she decided to get into Middle Eastern politics, if you guys didn't know. Said that potentially Iran could drag this out another 2 to 3 months. And that might be true. But what I don't get, and what doesn't really jive in my mind, is we are being told from President Trump directly, the administration, and related personnel, military personnel, that apparently everything in Iran is destroyed. We've even gotten commentary that we don't even know who to negotiate with because everyone's dead. Their navy's gone. Just like from the U.S., we are hearing that it's it's just gone. It's obliterated, it's decimated, and the only final thing is a little bit of infrastructure, bridges, as we just read this morning, and some of these power plants, but that's about it. Everything's gone. How can we live in a world where that's true, that pretty much everything is destroyed, and now with the blockade, that's an economic attack, but then on the other side, it's reasonable for them to be to keep this going for another 2 to 3 months. It's possible for them to shoot down some of our fighter jets. Which one is it? I don't understand. These things are mutually exclusive. Either Iran as a military apparatus is donezo, and we're just trying to figure out some of the negotiations before we just manifest destiny the shit out of the region, or we're being lied to by our administration and they actually still have a legitimate military force and it's something to contend with over the next 2 to 3 months. So I'm a little confused because we are clearly getting different information, and I guess I would love to hear what you guys are thinking about it, because they both can't be true. I'm not saying either side's a liar, but both sides can't be a truther. That's for sure. It's easy. It's insider trading. Very well might be. I guess I just wanted to share that with you because I think it does highlight the confusing aspect. But I find that, remember, in times like this, it's one thing to have a political prediction, but maybe you have a political bias that is kind of blocking what you think is appropriate or not appropriate. So sometimes it's good to go right into the odds. Strait of Hormuz traffic returning to normal by the end of April. What's that, 10 days from now? There's a 28% chance. So once again, trying to step away from our own bias. I know all of us come in here with a particular life narrative lens through which we see all these events, and maybe you support the current administration, maybe you don't, maybe you support Iran, maybe you don't. Whatever it is, there's a very, very good chance that you have some form of a bias, and whatever. If you have a bias when it comes to global politics, local politics, whatever, I don't really give a shit. I hope you're informed, but I really don't care. But what I am here to say is if you bring that bias into the world of trading, there's a very, very good chance that it could just completely destroy you. We see this every single election cycle, that half the people who don't like the incoming president, because half the country is never going to like the incoming president, regardless of side, they end up getting out of the market because they're like, nope, this president's going to ruin the market. And then guess what happens? The market rips, and it happens for every single president. So that's just one example of how a political bias can easily come in and maybe in one way or another prompt you to make maybe not necessarily the best trade or the best investment. So for me, sometimes I literally try to avoid headlines. It's kind of tough doing it the job that I do it right here with all of you guys. So even with all of that in mind, I guess maybe at market open, I try to wipe it all and forget that it happened. And then other times I just try to get into actual numbers. So right here, the chance of the traffic, as in all just the oil shipping route, returning to normal by the end of April within 10 days, only a less than a 1 in 3 shot. Okay, so probably not that high, probably not going to happen. U.S. and Iran permanent peace deal by. Okay, the odds are low by the 22nd and the 30th. Once again, by the end of this month, a 1 in 3 shot. But by the time you look to May, okay, more likely than not. And by the time you look to the end of June, where we're getting to the point of actually a 2/3 shot of it happening. So once again, these are just the odds, never a guarantee, but it's good to know the odds of the situation. And I don't know how this is connected or maybe not connected. I have a feeling that it is, but just also share this. Will the U.S. confirm that aliens exist? Apparently there is a 1 in 4, a 1 in 5 shot by the end of this calendar year that the U.S. government will confirm aliens. Now, does that directly relate to the Iran situation? Was there a crash landing site in Iran and we're trying to cover it up? And is this whole oil deal maybe just a big smoke and mirrors? Maybe. I'm not saying it is. I'm not saying it's not. My job is to present odds and facts and opinions to you guys. You guys, with said evidence, can take it however you want. But I'm just letting you know, on this day of all holidays, on 4/20, there is a 1 in 4, a 1 in 5 chance that the U.S. government will be confirming aliens by the end of this calendar year. So just take that information however you need to be taking it. Bringing it home a little bit, because this is going to get some hot news, especially as we get into the month of May, is the new Fed chairman, Mr. Kevin Warsh. Warsh's Fed confirmation hearing is next driver for the U.S. debt. So remember, the Senate needs to approve them. It's going to be interesting because obviously whenever Trump announces or does anything with anyone, the Senate gets pretty pissed, or I should at least say half of the Senate gets pretty pissed. Kevin Warsh pitched a case for Fed rate cuts. His future colleagues are skeptical. He has argued that the AI boom will ease price pressures, citing Alan Greenspan's patience in the 1990s. His future colleagues see an economy that looks nothing like it did then. In this case, he is very much wrong. Objectively, he is wrong. He is basically just saying whatever he needs to say right now to appease Trump, and Trump wants to hear all the rhetoric of cutting rates. And it's uniquely funny because this guy is as hawkish as they possibly come. It's one thing if you brought in a hardcore hawk. Even then, it's really, really hard to make a case for like more than a 50 bips rate cut right now. And I could see a little bit of a rate cut, but more than that, and we could argue about like the theory and the policy of what it should be. I think it's more interesting that it's this dude who's arguing for it because like, as of 6 months ago, this is one of the most hawkish people ever. I honestly think 2 quarters ago, he would have still been arguing for rate hikes. The second inflation popped up, this is the kind of guy that not even within the past year, as soon as he saw oil go up, his classic argument would have been oil's up. That's going to prompt inflation. Let's get ahead of it. Let's cut rates right now. But because Trump, obviously the person who is putting him in office, very much wants rates down, it seems as if he is going to just do, at least to the confirmation, he's going to do and say exactly what Trump wants him to do. Will it switch after that? Is it going to be one of those things when he finally gets into office, he's going to change his tune? Okay, possibly. But the whole story of how this guy got into the position, I still find it a little bit odd. So is he in there? Is he not in there? Well, right here, Kevin Warsh confirmed as Fed chair by May 1st, only 3%, May 15th, 36%, but by the end of June, 72%. So in terms of will it happen in the month of May, as of this moment, based on all the information we have about the current political setup, not that likely. But by the time you get to June, it actually becomes a super majority chance of, yes, it probably will happen. So he's going to be the next Fed chair. It's just a question of when. Remember, in the in-between, higher odds than not that Powell, the current Fed chair, will just remain in the position until Warsh actually takes over. That's going to be another political hubbub, but it's just how things go. And also remember, the way the Fed works and all these voting members for the Fed is when you're done being chair, you're not done with the Fed. Generally, you still stay on the board. And I know right now there's already starting some rhetoric of, what do you mean? Why wouldn't Powell just quit and step down? I don't know, man. It's just not how the Fed works. The Fed does not work by when you're done with your chair position, you're completely done with the Fed. That's just not how it works. Generally, you still remain on the board as a governor or something in that similar position. So is this the last we've heard of Powell? Most likely not. If anything, we're probably going to hear more about him next month when there's going to be all this hubbubaloo about Kevin Warsh not being in yet and who's the Fed and blah, blah, blah. So I just want to set you guys up kind of for next month in political talk, economic talk. This is probably going to be a big deal. And I think the other big deal is going to be the symposium and the meeting and the summit and whatever the fuck you want to call it between the U.S. and China. So just wanted to quickly share all of that. And very strange thing, but I saw it this morning, so I needed to share it with you as we have 1 minute to go. Germany is reinventing itself as a weapons factory. Didn't they try this before? I mean, I'm not saying I paid attention the most in U.S. history, but I feel like there was a good 2-decade period, 3-decade period where they were trying this shit and didn't really end well for everyone. So is Germany trying to sneak by a fast one on the rest of us? Do they think we forgot what happened in the first half of this century? Fucking Germany, what are you up to, brother? What's going on there? All right. But that's news as of last night. So just wanted to share that with all of you. And on that note, Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. All right, we're getting rocking for the day. Opening minute, nice little pop there. NQ. Let me get this drawn out. We already broke the pre-market high. Like I said, if you're playing the NWOG, the new week opening gap, you are looking for 26,840. We almost got that high. It got up to 827. I got my fill at 75 on this weird pop here. Obviously, at this point, I wished I held a little bit because that would be another 65 points, another $1,200. But hey, there is no crying in the casino. I still managed to make a nice chunk of change already today. Locked in a nice $1,000 per account. The only accounts I didn't go for the full 1,000 was my Legends because I only needed $200 to be able to secure a payout. So this will be my first payout ever from Legends. And I'm taking out 2.5K across all 5 accounts. So right at market close today, I will be requesting $12.5 thousand, which will bring my monthly payouts to 49,000 as of tonight. As of already done deal, 37 of which I saw about 30K. So we're going to be popping that number up by another 12. That's where I'm currently at on the month of April. But anyway, we did break the pre-market high. We are still going for the NWOG. In the meantime, there's a couple things I should probably show you, such as options flow. We could get a little bit into some of the key levels. I do also have some individual equity news as well. So let me just get this all set up for everyone. Thus far out of the gate, a tiny bit of profit taking, nothing too crazy. Here's a look at the Mag 7, a little bit of a hit there. So I just wanted to show this to you. Obviously, we will be circling back to it. I just want to make sure I have all the proper monitors up on my side. Okay, I think we are looking decently good. All right, very quickly, as the opening session is playing out, yes, I'll show you options flow. We're going to go over all the key levels. The biggest note of the day is actually right here. I find this very interesting. You have a put credit spread. So someone out there with size, and when I say size, I mean 6,000 contracts, is basically saying, hey, I think the market's going to close below 6,700, or no, actually above. How did they do this? So someone out there, sorry, I had it reversed because this morning I was looking at 7,100, so I'm getting a little squirrely with the numbers. Interesting. They want it below. Yeah. Okay, no, I was right. They want it below. This play right here. When you sell the 710s, but you bought the 115s, someone thinks that today we're going to expire, as in at 4 p.m. These contracts will expire 4 p.m. ET today. I am on the 0 DTE node. Someone out there to the sizing of 6,000 contracts. This is a 97.7, a 98 percentile play that we will end the day below 7,110. Is that player smart? Do they know what they're doing? Do they not know what they're doing? I have no idea, but I'm just letting you know that this 97% of the time plays are smaller than this, and this particular play is betting on us hitting 4 p.m. Eastern and being below 7,110, which is probably why you should have 7,110 marked out on your chart today, because there's clearly a live active play right there. Then we have another play up at 130, 135. So looks like the generic bounds of the day are somewhere between 7,065 and 7,150. I would be kind of very, very surprised if we get above and close above 150 or get below and close below 7,065. I would say from here, where my cursor is, all the way down to here, that's the generic range we're going to be playing with today. And if we fall under 7,110, if we fall under it, which right now it does still look like it's going for that upside gap fill once again on NQ, we're getting kind of close. After that, if we fall under 110, this play right here, this gigantic put debit spread is going to be acting as a ceiling. It's going to be acting as resistance. So just want to call that out. Once again, just because you see big plays doesn't mean that it has to work. We've seen big plays get blown out before. Just because you have a lot of money in the market doesn't mean you know what you're doing. We've seen that exact thing happen many, many times before. So I want to remind you of that. But just if we fall under 710, understand that that bounce back up will be running into a bit of resistance. There's nothing scheduled for the day, Monday, April the 20th. There's nothing on the books for us to be paying attention to in terms of data drops, but you should know at some point we are expecting to get another update as it relates to Iran and the Strait. Is it open? Is it not open? So please be on the lookouts for that. Remember, we're also in earnings season. There's really nothing too special going on today. United Health Group tomorrow, GE Aerospace, Capital One, United, the ones that you probably care about, Boeing on Wednesday, Tesla on Wednesday, and then fast forward to Thursday, you probably care about Intel as well. In terms of individual equity news, American Airlines falls 3% in pre-market after dismissing United mega merger. So that's not happening. And then right here, some news on Google. Google eyes new chips to speed up AI results, challenging NVIDIA. So still, I think the AI bubble, if it is a bubble, is alive and well. So just wanted to share that with all of you. If you haven't already, sign up for the newsletter. It is 100% free. When I mean free, I mean you've never had to pay anything. You'll never have to pay anything. You don't need a coupon code or anything like that. Just go to mattkohrs.locals.com, give me your email, sign up. You're not like a premium member or anything like that. Just become a normal, non-paying member, and you will get this breakdown every single Sunday. I cover what's going on in the market, cheat sheet for earnings, cheat sheet for all the major macroeconomic events. Nothing today. Tomorrow, you'll probably care about retail sales, and then I give you the seasonality for each individual day. The seasonality of today specifically is slightly bearish. The bulls win it more often, but when the bears win it, they win it with greater size. Tomorrow is leaning bearish, Wednesday is leaning bullish, Thursday is leaning bullish, and then Friday is pretty neutral. So it's, in terms of seasonality, it is by no means the strongest or the weakest week we've ever seen. We've definitely seen more impactful data and conditional probabilities and Bayesian probabilities as it comes to the world of seasonality for this individual week, but just kind of know, like, overall, a little bit of bearishness to start us off and then a little bit of bullishness to conclude the week. So just wanted to put that out there. Because the seasonality is not that strong, I would actually argue it's a little bit more important to be paying attention to the hot topic news, aka what's going on in Iran, and obviously from there we should be paying attention to the key big money levels. Where are the big money players positioned? And we should also be looking at flow. Speaking of which, the S&P 500 is actually a nice 45-degree angle to the upside, and the Mag 7 it did pop and gave it all back. What about the NASDAQ getting hit? So right now, the NASDAQ and the S&P 500 are telling two completely different stories. The SPY is up, the NASDAQ is down. What does that mean? It means find it somewhere within yourself to have the patience to sit on your hands and do nothing. Because when two highly correlated, highly related indices are doing the exact opposite of each other, that doesn't make sense. Hey, Matt, how do you go finding where you want to take profit? A combination of things. I look at key technical levels, key psychological levels. I look at where key positions are, or if I'm looking for certain dollar value returns in my account. Like for today, I saw nothing special at 80 where I got out. Here, let me show you this trade. Hang on, duplicate in a new tab. I'll show you my trade from this morning. We'll do a little bit of a live breakdown. Let me just get rid of all these other indicators because it's going to make it a little bit of a pain in the ass. I made my own indicator called Show Trades. This is not something native. Remove. Where is Show Trades? A, B, C, D, E, F, G, H, I, J, K, S, T. Where the fuck is it? Right there. All right, Show Trades. So this is the trade I took this morning to make the $1,000 per account. Did I see anything special at this level to get out at 80? No, I knew it was just over 50 points, and I knew 50 points is $1,000. For me, $1,000 is a good day, especially when I knew that there would be some weird action happening in the market. So sometimes you have to know, is the day setting up to be a nice trend following day, or is it going to be more of a choppy mean reversion day? I knew that I had good odds playing, which we actually didn't hit it yet, the new week opening gap. So I was like, okay, I didn't mind being bullish. The EMAs were getting a good fill here. Let me show you. I got the fill was actually right there. Oh, why did that not re-render? Okay, something's broken on. Okay, anyway, something with the re-render is not working. But you could see I got a fill at roughly 25. I got out at 80, and it was with trend. I knew about the new week opening gap, and then the question was why 80? There was nothing special at 80. 80 was just on this particular trade where I made $1,000. So sometimes I'll trade that way where I'm trading my account. Yeah, every once in a while you'll hear people talk about don't trade your account, trade the chart. I think that's kind of reasonable. I think sometimes with prop accounts, you have to trade your account because you know about your unrealized drawdown. You know about when you're going to get a payout. So I don't think that advice holds 100% of the time. But I also want to let you know, most of the time I'm a trend following trader. And for me to just pick an arbitrary level to get out, that's not trend following trading. I should be trading it as much as I could and or riding the trend as long as I possibly could. And if I did that this morning, I probably would have gotten out right here at 77. Oh, so I would have gotten out literally at the same value. That's just pure luck. But right here, we pop up, we pull back, we have a higher low, we put in a lower high. That is consolidation. Which way is this consolidation going to break? We put in another higher low. So higher low, high, lower high, consolidation. I mean, if you guys are more visual learners, I could draw it out for you. So at this point, the question is, which way is the consolidation going to break? Well, obviously, we broke this low. We made a fresh lower low right there at 79. I got out at 80 anyway. So if I held it, if I stuck exactly to my trend following system, I literally would have gotten out at the exact same moment, but that's pure luck. Obviously, the interesting play was, are we going to get the new week opening gap, which is up to 840? Yeah, you could be like, Matt, you're potentially leaving 65 points of like on the table. Yeah. And this time it would have gone out regardless. So I could have played it better, but obviously with the current information we have, I literally would have been getting out at the exact same place, but I didn't have to now take on this extra time risk because I was out at 9:09 and that would have happened at 9:39. So I took out 30 minutes of being in the market, which is a good thing. If you can make your money and not be in the market, that's positive. But here, on the downside, like this easily could have popped and I could have got the extra 65 points. So it's the woulda, coulda, shoulda type of a situation. But to come back to that main question of how do I pick my levels, it's a combination. I don't have like one specific exit system. And most of the time, I really don't have an exit system in terms of profit at all because I'm trend following. I just want to ride the trend as long as I can. So then that comes up to getting out when the trend breaks down, whether you're making fresh lows if you're bullish, whether it's a VWAP breakdown, whether you see a giant flow alert to the south side on spot gamma. There's many things you could do that might be your personal indication that, oh, the trend might be over. But most of the time, I'm not using measured moves. Most of the time, I'm not putting in specific levels. If we come up to $100 rung and I'm scaled in, as in I have multiple contracts, I will take off like right before, just in case there's resistance at 800. I might unload one at 98 or 99 and put the stop to break even, but that's still more of a risk management thing and not necessarily a profit target thing. But most of the time when I'm trading, my goal is to ride the trend as long as I possibly can. If the trend is trending, I want to be in it. If the trend is breaking down, well, hopefully I could take profits and actually be in profit. But it's more of a game of risk management. I've said this a million times. If you watch my show at all, I just want to give you that Monday weekly reminder that there is no system for day trading that can predict where the market's going to go with better than 50% accuracy. The market has an extreme amount of variance. You have 50-50 odds. Without getting too much into the depths of the stats of everything, all you really need to know, especially if you're earlier in your trading career, as an intraday trader, if you do the analysis on the 1 minute, 3 minute, 5 minute, 10 minute, 15 minute, 30 minute, 1 hour, 2 hour, 4 hour, anything lower than the daily time frame, 50% of bars are green, 50% of bars are red. 50% of bars have a close above the open, 50% of bars have a close below the open. whenever you get into the market, you basically have a 50-50 shot. Yes, there's a couple things you can do here and there to increase your odds to give yourself a bit of an edge instead of flipping quarters. You could theoretically get to a 55-45 chance. Maybe if you've done a lot of data mining and are really honed in on some of the specifics of extreme mean reversion or something like that, you can maybe get it up to 60-40. But my point is I understand on social media, you're getting inundated with like, buy my course and I'll teach you this model that's right 80, 90, 95, 97% of the time. Please understand that they are lying. Please, like, I just beg of you, understand that those people are lying to you. All actual day traders and really just any form of trading, like, understand that this game isn't a game of finding some sort of model that makes you money every single trade. That does not exist. If it did exist, people wouldn't be giving it away. They would shut the fuck up and they would trade it and they would become a billionaire. They wouldn't just talk about it like out loud. And in reality, that's not trading anyway. And if you don't believe me, go look at the best traders ever, the most like highly returning hedge funds that we've ever known. Maybe use Renaissance Technologies, $100 billion in profits. They have a return of like what, some years 60%. I think the average return's in the mid 30s after fees, which is insane. They were right 50.75% of the time. They weren't even right 51% of the time, and yet they've still made $100 billion in profits. How do you do that? You do that by being really good at risk management. The game of day trading, swing trading, I actually think it's a misnomer because that's not what you're doing. To be a really good trader, you're actually not trading. You're just a person who is paranoid and obsessed with risk management. So as long as you can keep your risk in check, as long as you can ensure that you're never going to have that bad beat blowout where you have to restart, you're going to be okay, because eventually the variance is going to work in your way where, okay, you're going to find those winners. The issue that I see a lot of the time with retail trading is it's the exact opposite. When they take a loss, it's large, and when they have wins, it's small. So they'll have a lot of small wins, and every so often they'll have large losses. And by the time that all nets out, unfortunately, the large losses outweigh the high amount of small wins. You want to invert that, especially as a trend following trader. As a trend following trader, you want to, of course, you want to win as much as possible, but as a trend following trader, you're probably going to be right 40% of the time, maybe 40. I see a lot of stats suggesting 35, but the way you can be net profitable there is by making it incredibly asymmetric. Take on baby losses when they occur, and then when you're right, ride it as long as you possibly can. That's how you win this game, especially as a trend following trader, which I want to be clear here. I should have explained this. Trend following trading isn't the only way to trade. There are many ways to do it. You could arbitrage, you could mean revert. For retail traders, trend following and mean reversion are the most common too. If you're a sophisticated player, you could probably arbitrage. You'd probably have an easier time arbitraging on event-based markets rather than the capital markets, just because you're already going against very sharp players. So the edge, unless you like have really special hardware, like you're not going to be competitive there. So if you want to be an arbitrage player, taking advantage of like pricing inefficiencies or something like that, maybe poly market versus call sheet. These event-based markets, sometimes they can still be pretty soft. A lot of people were doing that in the last presidential election. Like that's definitely an option for you. But if you're just kind of getting going as a retail trader, understand that you're going to most likely live in one of two camps. You're either going to be a trend following trader, as in identify the trend however you want to, MACD, RSI, EMAs, SMAs, fucking astrology for all I care. And you're going to want to ride that as much as you can. Or you want to mean revert and say, hey, it's gone too far in one direction. I'm going to risk the recent extreme and pray that there's a little bit of a breather and you capture your money in that breather. One is not better than the other. You can make a lot of money trading either of those. You just have to kind of commit to that system and stop bouncing back and forth and actually do the research and the data collection necessary to make money off that particular system. So even though I'm a trend following trader, I'm not saying that's the best one. Obviously, you can make money doing it. I make money doing it, but you could also make money being a mean reverting trader, or you can balance out your portfolio and have systems that are both trend following and mean reverting and try to take away some of the, that would improve your Sharpe ratio and like help with some of the extreme drawdowns that might happen in one or the other. So I know that's a little long-winded, especially from the initial question of how do I pick my profit target. But in reality, a simple question sometimes does have a complex answer, or at least an answer that deserves a little bit more of an explanation. So on that particular note, are there follow-ups? I think sometimes I'm speaking at too high of a level and maybe I lose new traders, but then sometimes I get messages of, Matt, no, like you didn't lose us at all. In fact, we'd prefer for you to get even deeper into the subject matter. So I don't know, like on this side of the camera, I try to do a better balancing act. Sometimes I am trying to speak to the newer traders. Sometimes I'm trying to speak to the advanced traders. And that's when we're getting into the conversations of like the charm level and the rate of decay of theta, and then obviously the rate of expanse of gamma, and where are these large players, and who the fuck puts on a long condor on a Friday on OPEX, like who's doing that shit. So I understand that in the audience here, we have quite the range of people who have been trading. Some of you have been around the block many, many times, and many of you are finding the block for the first time right now. So at any point, if you need me to either go more in depth, or if you need me to maybe rephrase it in a way that makes a bit more sense for people who are just learning it for the first time, just yell at me in chat. Just yell at me. Deeper. Now you guys are just screaming at me, go deeper. Go deeper, Matt. Go deeper. Guys, get your mind out of the gutter. We're here. This is a professional show. There are sponsors watching this show. And if they knew my 95% male audience was yelling at me to go deeper, it could cause problems. It could cause problems. The SPY, not much of a trend. It was going up, gave a little bit back. The Nasdaq is actively trading down. I think eventually this is going to break and it's going to set up the trade for the upside gap fill. But another thing to pay attention to are key order flow levels. And this is VWAP right here. This white dash line, that is VWAP. Let me move myself over. So that is the volume weighted average price for market open 6 p.m. last night. The light orange one is VWAP, the volume weighted average price from regular trading hours, as in 9:30 this morning. But obviously the EMAs on the 500 are slightly down. Let's zoom in on the 1 minute here. Someone asked me what time frame I use. I don't use a time frame. I use multiple. I find that my trading is the best and I seem to have the highest returns when I am using the confluence of multiple time frames. So what do I mean by that? Well, first of all, there's no one time frame that's the end all be all. That's another thing I see in terms of these like wannabe trading educators, and they're all influencers, and a lot of them are, I don't know, simps to one degree or another. When I say that, I'm like, okay, the 5 minute is generically up. The 10 minute is generically up. The 30 minute generically up. 4 hour generically up. Looking at the S&P 500 from the 5 minute to the 4 hour, it is up. I also know the daily's up. Looking at the Nasdaq, the 5 minute was up, pulled back, saved itself. So still up. Same with the 10 minute. Pushed up, it was bullish, pulled back, never really broke down, has a little bit of life in it. Same thing with the 30 minute, same thing with the 4 hour. For those of you who are poker players, I actually find that poker players make phenomenal traders and vice versa, because you understand this concept of like, there's no singular piece of evidence that is like the end all be all, like hardcore confirmation, but you're using various pieces of information together. That's the key. It's like, okay, you could use overall trend. You could use the options flow. You could use the options flow and the trend on various time frames, on various assets. You can look at the big money positioning. You can look at the gamma map. You can look at the delta map. You could look at the news. You could say, okay, CPI is coming out, PCE is coming out. You could look at order flow. You could look at things like these VWAPs. There are many things that what you're attempting to do is similar to poker's. You're putting together all these different puzzle pieces to try to give you the picture of like, okay, who's in control, and do I either want to be with that particular camp, i.e. the bull or the bear camp, or do you want to fade it? And the final question from there, after you try to figure out who's in control, is can you take advantage of that control with reasonable risk to reward? That's the next thing that you want to look at. Oh, speaking of which, it's 9:54. We have this little trend line. So I'm not really for or against any particular things such as trend lines or order flow or seasonality. to me, it's all things that should be used together. I think the best traders are putting those all together to make informed decisions. And then even if they're not putting it together well, or if they're not interpreting it or understanding it well, you can still be very, very profitable by understanding that the market is basically normally distributed. Not basically, it is literally normally distributed. So if you don't know what you're doing at all, like literally at all, if you have good risk management, you can still be profitable. Has Apex dropped your milli yet? Unfortunately not. I am still waiting, and it's a game of patience. But on that note, they're still running a sick 90% off deal. So use that code 90. Today is your last day, but technically you have 2 trading sessions left. That is pinned to the top of chat. It is in the description of the video. Remember, even though I'm waiting on my $1 million payout from Apex, they are the only one who allows you to have up to 20 accounts. So obviously the scaling is very phenomenal. And right now, when you consider the fact that you could have up to 20 accounts and they're running a 90% off deal, that means you could take the eval for like $20 depending on the account size you use. Personally, I like the end of day drawdown 150K accounts. That's my personal favorite. So I guess take that however you want. I know a lot of people do like the 50K account. Some people like the 25K account. Like, everyone has their own thoughts and opinions. I just implore you to use whatever account is best for you to be successful. That's the name of the game. I just want to let you know, Apex 90% off. It does not get cheaper than that. But anyway, take advantage of it with code Goonie. Pinned to the top of chat and in the description of the video. All right, we're right at that trend line. So the pink dash line is the 50% of the high and the low intraday. We kind of got close, but not quite. But we did recapture that VWAP. That was a legitimate long. That's a fair long to take. If you're long at 70, I'm kind of jealous. That was a good one. They haven't paid you yet. Nope, my accounts are still under review. I still have all my accounts. I can show them to you. Right here. See, they're all right there. They're the same numbers they've been ever since February. I can't trade them at all. My contract size limit right now is 0. So when I tried it, like if I click a button, just nothing happens. But I still have all my Apex accounts. There's all the numbers. Nothing has changed since February. This particular run was from late October 21st to February 3rd, 73 trading days. I am up net $1 million, and that was after taking out, I don't even know how much I took out, like 200K or something like that. I don't even know, 150K, I think I want to say. I'd have to ask my producer. I forget how much I took out, but I'm up over $1 million. And right now I'm up net $1 million. I mean, you can add up the numbers yourself, but there's all my Apex accounts. I just can't trade them, so I don't really show them. That just kind of messes it up. Why promote them if they're not paying you? Because this is the process. This is how it goes. I've reached out to all the people who I could find that have gotten a 7-figure payout from them before. None of them were ever fast. They all took time. And I think for me, this is just my guess here. I think my request was at uniquely the worst time ever, because I requested in February or in early February. Right after that, they had all the drama with Brian Stonk. So all of a sudden they had issues with influencers, and that took all of their time. Then from there, they rolled out a new website. Then from there, they rolled out new accounts. Since then, they've been trying to work out the specifics of their live program. So I can see in retrospect that it just takes a while, because on top of just the business being super, super busy and a lot of things going on, then on my account, they have to do all the KYC, the AML. They have to review all 73 days of my trading, and I traded a lot per day. So that I wish I had the money in my account right now? Of course I do. What human wouldn't? But also then from a business perspective, I understand how it got to where it's currently at. If that makes sense. You think they will ban you? Is that why they usually... They'll probably most likely move me to live, especially that's part of it right now, is that they're figuring out their live program. So most likely the way that I'm currently live with Lucid right here, these account numbers, the 183s, 556, 555, 54, 53, 52, these are live trading accounts, as in actual trades actually hitting the market. So most likely I'll get moved to a live account on Apex is probably how this will play out. A little bit of a fake out breakout there. Little bit of a fake out breakout. But to be clear, I don't know that. That's just me guessing, kind of like reading the room type of a vibe. Just a guess. If I took that breakout at 70, I would have gotten real close to getting knocked out. And in fact, I might have got knocked out if I guess I moved it up by 2 points. When they take out the DLL, I'm all in with Apex. Yeah, so the DLL is the rule they're using now to get rid of the MAE, the maximum adverse excursion. So they just replace one rule with a rule that's a little bit more systematic, so it's easier. And that's how they can get into the world of no denied payouts. I can understand that. I'm not saying some people trade well with DLL and it stops them from doing silly stuff. Other people don't trade with DLL. That's a little bit more specific to your system. Right now, the new accounts do have DLL, but the trade-off there was they got rid of the 5-to-1 risk reward. They have no MAE and no payout denials. So that's the trade-off. And that's the give and take of this world. Is just how it works. So if you're a person who really doesn't like DLL, well, the good news for you is Take Profit, TPT doesn't have DLL. Tradeify doesn't have DLL if you pick the Flex account. Legends doesn't have DLL. FFN doesn't have DLL. So if you're a person who just like DLL doesn't work for you, there are options available. But for many people, DLL, they like it because it puts guardrails on them so they don't get tilted in the day. So it's just more of a, it's you as a trader. It's you in your trading system. It's just, for some people it's good, for other people it's not. They forgot about you? No. I do have confirmation from some of my contacts at the company that my case was not forgotten. I did think about that. I was like, dude, is it taking this long just because like they forgot to review it? But I did get confirmation from someone at the company that my case is being reviewed. I did get that confirmation. Very quickly, the NASDAQ, like I said, something's a little suspect today because the SPY is looking so strong, but the NASDAQ's at a delta low and never really had a pop. So something's a little bit mismatched here. The 5-minute, 10-minute, 30-minute, 4-hour momentum is bullish on the S&P 500. Momentum is actually decently bullish as well. I just don't like the flow of the NASDAQ. It's looking a little bit suspect. The Mag 7 also got hit to 949, popped up, now going flat. Looks like maybe we have a trend breakdown here. That's a bummer. That's a fake out breakout. That's a bad beat. We recaptured VWAP and we went from 70 to 803. So a nice 25-ish point right there. We tagged it for the second time. If you took that long, you can't blame yourself at 83. You just have to have the discipline to get out when you're wrong. That was a legitimate long. You had a legitimate reason to go long at 83. You had a legitimate reason to go long at 70. If you took this long at 70 and just got knocked out for break even, if you took this long at 83 and got knocked out for a small loss, do not blame yourself. Remember, the market naturally is going to have variance. You're going to be wrong half the time. It's a game of keeping your losses small because then when you ever catch the trend, well, it's going to be a very big, large, asymmetric return. So I get it. I've been there. And sometimes I'm in that purgatory with you. Whenever you're trading, you want to make money. I understand we all have the goal of every single time you trade to be making money. That is the human aspect. That's the psychology. And I'm not saying it's the easiest thing to accept, especially in the real time when you see your numbers going up and down. I fully respect that. But you're going to be wrong half the time. You just have to get really good at admitting when you are wrong. This is not necessarily appropriate for all traders, but maybe this is a good test for some of you. Before you take any entry today, maybe just a little bit of a test. Before you take any entry, ask yourself, at what level would you admit you are wrong? As soon as you have that level defined, the second you enter the trade, put your stop right there. Try to hold yourself to be accountable to that exact level. I find that there's people, it gets going, they get into the trade, and then they start to ask where should I actually manage it? Like, what should I do? And they realize maybe the management point is farther away than it should be. Maybe it's outside the parameters of their risk. Maybe it's closer and they should have gone into more contracts because they have more room to work with. So maybe a little bit of an exercise, maybe a little bit of a pop quiz for you folks today with your trading is before you get into a position, ask yourself, Where would you have to admit you are wrong? And once you figure out that level, get into it. Well, of course, if you like that level, but assuming you're fine with that level, size it accordingly, get into the position, and as quick as humanly possible, get your stop there and see if you can actually hold yourself accountable to it. Once again, I think that's a good exercise, maybe not appropriate for everyone. Maybe for some people that's outside of your system. But I think there's at least one person in here who might be able to benefit from something like that. How about AMC bag? AMC is absolute fucking trash. There's a bunch of fucking retards who are like excited because it's making a pop. They're like, AMC squeezing, because from the all-time low, it is currently up 96%. They're like, look at AMC squeezing. And then it's like, they're literally that meme. I mean, it's actually so low that I don't know, will I even tag it? It's down 99.6%. Like, they don't realize they are that meme of it's all the way down and then it pops a little, like, let's go. Oh, this stock is going to bankruptcy. Like it's just a question of when. It's not a question of if AMC is going bankrupt, it's when it is. And they're just stoked that it literally bounced off $1 because they had to do refinancing to get it above $1 so it doesn't get delisted. Like, this stock was in legitimate risk of getting delisted from the New York Stock Exchange. So they played a little fast and loose with some of their debt covenants just to get it to pop. And they're like, look, it's up. It went from below $1 to almost now $2. It's like, dude, scroll out. What game are you playing? Like, this is horrible. It's absolute trash. So if you want to play it for an active trade, have at it. If you want to try to rip the range high, rip the range low, good for you. I hope you make a bunch of money. But if you think that this is going to somehow like just squeeze and it's a long-term investment, you're fucking stupid. AMC made you. Well, that's just factually inaccurate. How did AMC make me? No, I covered trending news and explained how the market works to GameStop people, to AMC people. It didn't make shit. Did it help because there was a large interest in it? Yeah, but my knowledge of trading and my ability to be able to explain what's going on, it made me, and oddly, it's now making me more fans because they know I was right the entire time. I called out AMC as a great trade. I never said it was an investment because I never thought it was an investment, and I went on record multiple times. Do you know how many times I was on national news pleading my case that AMC was a trade? There's a somewhat famous clip on CNBC when they were trying to pin me into a corner saying, oh, why would you invest in AMC? And I said, I wouldn't. It's a trade. It's an active trade right now. It's up there. You can watch it. There's video evidence of it. You know what else there's video evidence of? Not only did I say it was an active trade to the upside the entire time, I also said at any point when you're reasonably in the money, move your stop to break even because you don't want to lose money. And then after it really started getting going, I was the only person pitching using a trailing stop loss. As it goes higher and higher and higher, just ride with it. And as soon as the trend breaks down, take your money and move on. There are countless clips and streams and proof of evidence that I was the only person who was right about it. And then when it started to break down, it was right in this zone. I believe the end of 2021 when they released the ape whatever dividend, the backdoor dilution that everyone's like, it's not backdoor dilution. I was the only person calling it backdoor dilution. And then obviously from there it collapsed. So not only was I right on the pump, I was right on the management of the pump, and then I was also right on the dump. And obviously, at the point of the dump, a lot of people got mad because they weren't listening to me on the first part. But now seeing how this played out, I'm actually gaining more fans and more support because people are realizing, oh, wow, Matt was actually right the entire time. The entire time. But you also covered those stocks for like a year. Yeah, because it's what you guys care about. Oh, my God. Wait. Am I the first content creator ever to cover a subject that the general population is interested in? No, that shouldn't be allowed. Wait, is that how social media works? Is that how media works? Wait, hold the fucking phone right now. Are you telling me all forms of media are effectively just trying to cover what their viewership base is interested in? No. Is that legal? No. No, right? Wait, that can't be legal. There's no fucking way that media is attempting to cover what their viewership base is interested in. I don't. Is it legal? Yeah, bro, sour sauce. I sold when the bull flag broke. Don't be like this. So you listened to me. So I was right. I don't think you're allowed to ever cover a new piece of content, especially if your audience has a new base. Dude, AMC didn't make shit. GME didn't make shit. I had an audience that appreciated what I did because not only was I educating them about the market and how the market works to the best of my ability, but I was also calling out fraud and corruption. It just so happened that at that moment in time, there was a lot of fraud and corruption related to AMC and GME, where there was a large overlap of people also trying to learn about the, I guess, how the stock market functions. So for me, I was in the position of content creation and knowledge that I was going to be able to ride the wave for anything. It wasn't specific to AMC. It wasn't specific to GME. Why did you delete the videos? Nothing's deleted. It's in a playlist. Learn how to use social media. You're acting like a grandma who doesn't know how to like navigate the internet. It's in a playlist. Go look at it. It's all up there. So I would have like this argument of, oh, they made you. No. If anything, they needed me a lot more than I needed them. But in reality, I was in the position of knowledge about the market and also in position of, I guess, like just reading culture of being able to ride it because I had eyeballs. And if really that's your biggest argument, why didn't you ride the wave? If it was so easy and if it was so easy for anyone in this world to do, why did you not do it? And also, why am I also the only person from that era who is still not only doing content creation, but doing it at like the highest level? Pretty easy. I personally stayed around because I still don't know what a dark pool is. One day we're going to find out what it is. Man Ape was the dumbest fucking thing. Do you know how much shit I got for that? Of telling the entire world that it was a fucking scam? Like, I don't know if there's enough appreciation for how much I called out at Ape, and the entire community, at least it felt like it, turned on me. And guess what? I was fucking right. And dude, the amount of shit I had to take. I hope the shrewd people just listened to me and made a shitload of money, either on the downside or they saved themselves a lot of money by getting out appropriately. But everyone else was telling you, yes, it is good, do it. And they were all just shills for Adam Aron. Adam Aron is still paying himself over $20 million per year. He is credibly accused of being a pedophile. He was so fucking stupid that he got catfished into thinking a 17-year-old girl, 16-year-old girl, whoever it was, an underage girl was talking to him, when really it's even sadder. Well, no, I would say morally it's better, but it was a 35-year-old woman who was catfishing him. That is the person who these people are still putting their money behind. A dude who is not only weird because he thought he was talking to an underage girl, but then it turns out he was so fucking stupid that he was getting catfished to the point that the FBI had to get involved. The dude continues to pay himself $20+ million a year as the company is just hemorrhaging money. And then they're like, yeah, this stock's going to squeeze. Well, yeah, I just don't get it. Like, it is some of the dumbest fucking people in the world. Got out between 65 and 72 because of your suggestion of a trailing stop loss. Yeah. The people who listened to me crushed it. The people who didn't listen to me are the people still on the internet excited that it bounced from $1 to $2, even though it's down 99.5%. Are these AMC people still on the hopium train? I definitely was a winner because of your trailing stop loss advice. Yeah. I mean, go read my Twitter. I mean, it blows my mind that these people are still people. Where was it? I got into a fight recently with a dude. Right here. This is one of the dumbest people. Wolf of Ape Street. When you have a name like that, you know you're a special type of fucking stupid. AK, don't be confused. Today was funding. What's to come? A structural AK is still due on Monday morning to execute reorganization. This is a reorganization coming for sure. Don't be fooled by those who have no clue what they're talking about. This is the most exciting time in company history. This is the most exciting time in company history. Very nicely played. Checkmate, April 17th. We're supposed to believe. Hang on. Let me really illustrate for you guys in here. This is the most exciting time in company history. One more time for those of you who maybe I scrolled a little bit too fast. This is the most exciting time in company history. You don't say. You don't fucking say. And then, of course, I want my thoughts to be heard. You're fucking retarded. If you think AMC is doing anything more than speedrunning bankruptcy, you need to learn basic analysis. You deserve to lose all of your money for supporting a pedo. I forgot about that part. And then I got into a fight with a baldy guy. Like these people, they're all so fucking stupid. At a certain point, I hit him with a classic your, because he does like when people like they're so stupid. These people are so fucking dumb. And I try to help many of them. And I think for about a year and a half of my life, I very much cared about like assisting as many people as I could for making disastrous financial decisions. But then at a certain point, what's that saying? You can lead a horse to water, but you can't make a retard do something smart. What's the saying? You can lead a horse to water, but you can't get a retard out of AMC. I don't know. I don't know what the saying is. I'm not a philosopher, but it's something along those lines. And when I had to finally accept that, I feel like the only thing I could do like one step further is like actively short it and show the world my short position. That would be the only more enjoyable thing I could possibly do, is this second it actually starts to break down again, ride this all the way back down to $1 and just every single day post my profits. That's the only thing I could come up with that would be a more enjoyable way to engage with this audience. Yeah, Matt, your emails aren't working. Hey, Matt, you have any idea why you stopped not getting weekly newsletter, payday Friday update takes? So wait. Are you guys all having issues with this? Let's do a test email. Matt Kohrs email list test. This is a test. Send real-time email. Matt Kohrs email test. This is a test. Love, Matt. All right. You guys should all be getting the email right now. Matt Kohrs email test. This is a test. Can I get a thumbs up, thumbs down on what happened there? Did you guys get it? Did you not get it? Did everyone get it? Did some people get it? Just so you guys know, we're coming up to equal it. We're coming up to the almost IB low, but we're also coming up to VWAP. I'm curious if we're going to bounce off of either 713 or 700. Matt doesn't receive his own email. Well, because it comes from my email. I'm not on my own listserv. I guess I could put up. No, AMC is AMC is the future. Thumbs down. No. Oh, why are you guys not getting it? I got an email. Did you ask for my crypto wallet? Wow, a lot of people are saying they're not getting my email. A lot of people are saying. Okay, I will reach out to the locals team, the Rumble team. What the fuck? No email. Okay, so only a few of you got it. No. Okay, so only a couple of you. Okay, I'll just put that on my to-do list today. I'll reach out and say that a lot of you. I mean, I'm seeing a couple. Got the notification on the Locals app, no email. Okay. What is today? I'll put that on my to-do list. I'll get to the bottom of it. I appreciate the heads up that something is not working as it should be. Very quickly, Mag 7 still trending down. NASDAQ trending down. S&P 500. Very, very good lesson. How did we know that something was a little bit fishy about this pop? Let's rewind to 10 a.m. This is an important lesson. Let's rewind to 10 a.m. This is 10 a.m. Well, we just got a pop. Did something just get announced? Someone just hit a bid market order. A couple hundred contracts on NQ. Anyway, at 10 a.m., I just wanted to point out the mismatch. At 10, the SPY was looking good. Momentum was positive. It was back here. Things were popping. But how did you know? Maybe just to take like a little bit of a breather. NASDAQ was trending down. Mag 7 trending down. So when things are mismatched, you don't know who's right. I mean, yeah, maybe the NASDAQ popped and we kept going. Or maybe the SPY dumped and then we dropped. But my point is pointing out the mismatch, that it makes it kind of a lower confidence setup, because remember before when I was saying, oh, you have a bunch of puzzle pieces and you're putting it together, that's kind of a weird shaped puzzle piece, because if we're so bullish, if the momentum's so good, if we are popping, if we are going at that moment for the new week opening gap, why is no one getting into the Mag 7? Why is no one getting into the NASDAQ? So that's a piece of information that, once again, no piece of information by itself is perfect. Not at all. But that's a piece of information where you're like, okay, like either I'm going to take a stab at it, but be really good with your risk management. Bitcoin just popped. Hang on. I feel like there's a bigger piece of news. Is there anything on True Social? No, nothing on True Social. What about, hang on, let me check our news sources. Yes, right here. 33 seconds ago, U.S.-Iran talks are planned for Wednesday in Pakistan, according to CNN. So CNN is reporting that in 2 days, Wednesday, the U.S.-Iran talks will be continuing. 15 minutes ago, breaking, President Trump says lots of bombs will start going off if U.S.-Iran ceasefire expires without a deal being reached. The U.S.-Iran ceasefire is currently set to expire in 2 days. So, okay, 15 minutes ago, we have a piece of information saying we're going to keep popping. 4 minutes ago on True Social. Why did I not get that? Now all these notifications. Israel, okay, here's the news from 5 minutes ago. Israel never talked me into the war with Iran. The results of October 7th added to my lifelong opinion that Iran can never have a nuclear weapon. I did and read the fake news, pundits and polls in total disbelief. 90% of what they say are lies and made up stories, and the polls are rigged, much as the 2020 presidential election was rigged. Just like the results in Venezuela, which the media doesn't like talking about, the results in Iran will be amazing. And if Iran's new leaders, regime change, ! Are smart, Iran can have a great and prosperous future. President DJT. Well, there we're at. All right, a couple more people are saying you're finally getting the email. Is it just a little bit of a delayed thing? Like, do more of you have this little test email now? Or are a lot of you still waiting on it? Was it just like a delayed thing? Same shit, different week. Yeah, 100%. 100%. Reminder, 90% off on Apex. Right now, this is the most financially advantageous deal to take. So if you're trying to trade with someone else's capital, if you're trying to trade with a SIMDA-funded environment, the best deal of the day is Apex. Code Goonie will get you 90% off. You could take the evals for as cheap as like $20-some, and they still have 1 day pass. So you could take it today and actually pass it today, just so you guys do know. Delayed thing, nothing. Email arrived, I got it. No email, never got it. Nothing at all. Was delayed. I'm shorting Matt's email. Don't you short my email. That's just rude. All right, we are bouncing back up to that VWAP. So we're kind of already in that ping pong mode. Once in a while, we get into this where we bounce from session VWAP to regular trading VWAP. Regular trading hours, 9:30 a.m. Session is 6 p.m. the night before. Those are the like dash dot lines, the white and the light orange, or if you like this view better, I didn't even put it on this chart for the day. Hang on, let me copy, let me paste. We've seen this before when you just start ping-ponging between the two, and maybe that trend's going to break, but just to let you know what's going on for right now, we are still very much just ping-ponging between the two VWAPs for all my order flow traders, which apparently if you follow ICT, you're not allowed to trade order flow because their cult leaders said that it is not a viable way to trade the market. So you just have an entire group of traders who are saying, nope, can't do that because this guy who's never made money trading told me that it is not a viable way to trade, even though there are many people making millions of dollars a year playing order flow. Will Matt's email reach his followers? Oh, a new poly market? That's funny. A new poly market. I'm here for it. Anyway, shout out to Apex, 90% off with that code Goonie, pinned to the top of chat in the description of the video. Thus far, momentum is holding. 5 minute, 10 minute, 30 minute, 4 hours bullish, 5 minute, 10 minute, 30 minute, 4 hours bullish. So on an intraday basis, I'm still looking for a long opportunity. I would not be looking for a short opportunity. If you were like a really short-term trader, you could have faded any of these VWAPs to try to play it for the other VWAP. Thus far, that was a tough trade because we didn't actually hit the second VWAP. We also didn't get the NWOG, the new week opening gap. So I don't know. Like it's not like I've seen like a very evident play today. You could try. I mean, that's not the craziest long. You could be long at 65. You could risk 47. That's minimal risk. And then you can still target that 840 level. That's bullish. Are we seeing the Nasdaq showing a little bit of life? The Mag 7 showing a little bit of life. And now the SPYs, it went from intraday high to intraday low, and now that's even pumping a little bit. We are trying to hold that 710. Look at 725 with the target of 135. Okay, so this is shifted. 130. 130, 135 is kind of this interesting level. It is a call debit spread. Oh. So someone has a call. Oh, okay. So it's not equal size, but someone's long a condor, which this is the second time now in 2 weeks we've seen this play, which is noteworthy because you generally never see long condors, especially at size. But now we've seen 2 in 2 weeks, and I missed it at first because it was a different size. But someone out there, most likely all of these plays are put together. That's a guess, but I think it's an educated guess. Someone is either looking for us to get above and close above 135, or they're looking for us to drop below and close below 110. They don't necessarily, well, they do want it. They would prefer it be below 110 because they're going to make more money off that particular play. But it looks like we have a call debit, not credit. Generally, we're talking about call credit and put credit spreads. This is a call debit spread. This is a put debit spread. So it's inverse what we normally talk about here. I'm seeing two debit spreads. When you put two debit spreads together, you're basically either long a straddle, but this case, since there is protection, it's technically a long condor. It's definitely a long condor. I come from ICT clan. Oh, that's a bummer. How much money are you down? I feel for you. I feel for you. I think it's really tough in like this new age of trading is you find someone to try to learn from, and it's just tough to know if they're full of shit or not. So if you don't know anything, you don't know what you don't know. So it's like really tough for a new trader to be able to really get into the nitty gritty of, okay, is this guy full of it or not? And then when there's so many other people telling you that he knows what he's doing, that's a really tough thing to overcome. Rum is up 6%. Yeah, because people are realizing it's probably the most undervalued AI infra play. Rumble. Now, this is not like, oh, it might happen. This is like legitimately now, Rumble has 22,000 GPUs with their acquisition of Northern Data, a company in Europe, and it has what, 85% capacity? Like it's not like, oh, we might get these. No, they have the GPUs. It's not like, oh, we might get the GPUs up and start renting them out. They're already doing it. 22,000 GPUs already operating at almost maxing it out. I think the issue with Rumble. So the question is, Matt, if you're so confident this is why, like that, this is a strong, undervalued AI infra play, why is it not higher? That's a very fair question. Once again, this is just like my opinion. I think it's because no one thinks of Rumble as a stock at all. And if they do think of it as a stock, as Rumble, they think of it as just the video platform. They don't even realize that it's an AI infra play. This rarely happens with larger stocks because the larger a stock is, like these blue chip, like whatever, Fortune 100, NASDAQ 100, those type of stocks, every piece of news is so well known and there's so many people looking at it that it's going to be priced in. But when you get into stocks that are barely in the Russell 2000, it was just recently introduced, there's only a few analysts paying attention to it. If you look into the Rumble earnings call, I think there's 3 analysts on the line. There's 2 analysts on the line, something like that. So it's one of those things that I just think the lack of popularity and the lack of discussion of the name is explaining what's going on with Rumble, because it's rarely discussed as a stock trade and or investment. And when it is, it's really kind of only discussed as what's going on with the video platform. So that's my reasoning. Maybe that's right. Maybe that's wrong. I just don't think it has enough of a following that the proper news is getting out there to really properly evaluate it. I think it is not, if it's not the most, it's a top 3 undervalued AI play. I'm a recovering ICT trader. I realize everything in ICT is perfect on hindsight only. That's the world of trading, brother. Trading is always super, super easy, and it's the most easy thing to do in hindsight, and it's the most difficult thing to do in real time. And that we all go through that. All right, looks like we're finally going for that VWAP test. And we also just set IB, so we just broke IB to the south side. We're at VWAP, we're at IB. The first hour of trading is donezo, and we just made a fresh low the first minute past IB. If you don't know what IB is, initial balance, it is the high and the low of the first hour of trading. So from 9:30 to 10:30. It is the 10-minute or excuse me, the 60-minute Orbo. The Orbo, if you don't know what that is, you could have any time frame Orbo, the 1 minute, the 10 minute, the 5 minute. It's just that first chunk of time of the day. So if it's the 1 minute Orbo, it's from 9:30 to 9:31. The 10 minute is from 9:30 to 9:40. The 30 minute Orbo is from 9:30 to 10. The first hour, the first 60 minutes is from 9:30 to 10:30. And in the world of trading, we call that a special name. We call that initial balance. So if you hear initial balance, if you hear IB, if you hear Orbo, understand that IB is just the first hour of the day. It's a type of Orbo, a special type of Orbo, but there are other Orbos. There are people trading the 30-second Orbo. They literally look at the chart from 9:30 to 9:30, and they play that breakdown. So they're all types of Orbo trades, opening range breakout, ORBO, opening range breakout. So you're either breaking that range in one direction or the other, either bullish or bearish. But for the first 60 minutes, we do give it a special name called initial balance. I believe we call it something special just because the old wisdom of the market is that large institutions do most of their trading in the first hour. So that's the balance of the day, because you're getting an understanding of the extreme movement, the high and the low of large players, large institutions. Does that hold true anymore? I have no fucking idea, and I really don't care, because all I care is there an edge trading it? A lot of the times when it comes to trading, you have to understand it's interesting to know why we have that type of stuff, but it also doesn't make you money. What makes you money is, okay, what is the edge there? Does this particular pattern play out a lot, a little? What's the risk? What's the reward? Same thing with gap fills. Why do people trade the gap fill? I don't know. You're going to have to go ask every single person why they trade the gap fill. What I care about is there an actual edge trading the gap. So you don't get bonus points in trading to be able to describe why stuff happens. You just get the bonus points for getting the trade right. If you describe it or you don't describe it, it really, that part of it does not matter. So I think sometimes maybe it can make you more comfortable in the trade of like understanding the thought process behind it. But once again, you never really know if your thought process is right or wrong thought process. What you know is just, did your account go up or did your account go down? Is there a free Discord? No, there is a premium Discord. I would not do a free Discord. It just, to be completely honest, it just gets too much riffraff, too many trolls. It gets a lot of people who are just not serious about trading. One of the best ways for me to filter the people who I actually want to mentor is by putting a price tag on it. And what's weird is the higher in price you go, you end up getting more and more people who are more serious about trading. So it's oddly, from a marketing standpoint, it's inverse. Every time I raise the price, I just end up getting more members who are more serious about trading. Do you know Timothy Sykes? I do. My first real attempt at active trading in the world of penny stocks, I ended up buying his course. And I quickly realized that penny stock trading was like the worst thing ever. Russell's ripping. It is up a nice. It went back green when the SPY and the Qs are red, so people are liking small caps. So that's actually going to bode well for something like Rumble, which is in the small cap. Real hope this would hold up. Looks like they're going to fill the gap. Well, there's gaps to the upside and the downside. So my question to you is, what gap? There's a downside gap fill to the high from Thursday of last week at 7,051. There's another gap at 6,887, and there's another gap at 6,618. So there's 3 downside gap fills on SPX. But then if you look at ES, there is a new upside gap fill to 7,164, and on NQ, there's an upside gap fill to 841-ish. So on the futures market, ES and NQ, there is an upside gap fill. And then when you look at the actual indices, SPX has 1, 2, 3 in recent history. And then NDX does as well. Let me mark those out for you. 26,400. We have one at 25,387, and then there is another one at 24,209. So SPX and NDX in recent history, there is more, but in recent history, there are 3 downside gap fills. And then looking at the futures market, you have 1 upside gap fill. So in terms of they're going to fill the gap, I generically agree with you. It's just the question is, what gap? Have you read 7 Wave Theory? I met the guy yesterday. I think there is 13. No, I think those people, there's unfortunately, what's the difference between epidemic and endemic? One is local and one is spread. Endemic versus, okay. What is the difference between epidemic, endemic, epidemic, and pandemic? Epidemic spreads rapidly within a finite geographical area. Pandemic spreads rapidly across several countries, continents, or the world. Endemic, consistent, present in the population with a relatively low spread. So I would say in the world of active retail trading, there's an epidemic of people trying to learn dumb shit like that, thinking that the reason they're not making money is because they didn't learn this like obscure thing that takes a lot of time to learn, like hundreds of hours of watching streams and explanations and this and that and the other thing. When in reality, to be profitable as an active trader, I know you guys aren't going to want to hear this, but it's relatively simple. Use whatever fucking strategy you want and just control your risk. There's a lot of people who just don't want to admit that the reason they're not making money is because of them. That's it. That is the most painful truth of trading, day trading, scalp trading, and swing trading is the fact that you're not making money, not because you don't know enough about trading. It's because you're not disciplined. You're not sticking to your risk management. There are millions of strategies that will make you a millionaire. And the reason you're not on that particular pathway is because you don't have the discipline to stick to the system you should be sticking to. A lot of people don't want to admit that it is relatively simple. You don't need to spend hundreds and thousands of hours of learning the most obscure models and frameworks and this and that. I deeply believe you can learn everything you need to learn, to be a profitable trader from a technical standpoint within one long weekend of study, one good week of study. And if you're doing it kind of seriously, 1 month of study. I deeply believe that's the amount of time you need to put into learning the technicals of the market. The hard part of why it takes many people years to be profitable is because they don't have the discipline to stick to the system that they know is the right way to do it. We all get tilted. We oversize. We think it's going to magically come back. And instead, they don't want to admit that to themselves. So then they go down these pathways of just trying to learn obscure things. Like, what's that? The 7-wave theory, or like, I get what's that part of Elliott wave or ICT, or these they're not hyper complicated, but they're hyper lengthy because the people teaching it don't know what they're talking about. So instead of actually informing you of how to be profitable in the market, instead of what's the saying? Instead of dazzling you with brilliance, they want to baffle you with bullshit. That's what's going on. Folks, some of the most simplistic strategies will make you net profitable. The question, and you have to be honest with yourself, is do you have it within yourself to find that discipline to just stick to that system? That's all it is. The people who win this game are the people who just don't blow out. To not blow out, you have to be really good at risk management to the point that you never have a misstep. And as soon as you can crack that code internally in yourself, well, congrats, you're on the pathway of an extreme amount of profitability. That's what it is. Stubborn price targets, stupid DCAs, anything other than consistent entry and exit rules. Controlling emotions has been the most difficult aspect of trading in my experience. Getting better, but goddamn, it's hard, 100%. And I'm not going to sit here and say it's not hard. I'm going to sit here and say it's relatively simple to learn to do what you should be doing, but it's a completely different battle to actually do that. Like right now, if you took this long position, if you were long at any point, the fact that we broke down below VWAP, you should be out. We all know that. But my question to all of you is, for all the people who are long and that was your risk, how many of you actually got out? Like, be honest with yourself, whether you want to share it with the group or just ask yourself internally. But there are people in here who they know this is now a breakdown. They know they should no longer be long. But yet there's something about it. You're like, oh, but it's at 700. It might bounce back. Oh, maybe this is a little fake out and it might bounce back. I've done it. I'm not, please don't take this as like me chastising you. If anything, I'm commenting on the dumb shit that I do. Like, we've all been there. But there are people who, whether you took the long on, I don't know, 715, you took a long here at 720, you took a long on one of these VWAP recaptures, you took the long at VWAP, and yet it broke down. So the question is, why did you not get out? Why did you not get out? And once again, please don't take this as me chastising you, because I do it. If anything, I'm yelling at myself because I've been in that position a gazillion times where I took this long. Do you know how many times I've taken this long, which is a good trade? If I show you this chart right here, let's rewind. This is a really good teaching system. So please, teaching moment. So please listen up. If I rewind the chart to 1038 and you said, okay, VWAP, 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 inverse, shoulder, head, shoulder, momentum on the 5, 10, 34 hours good. Options flow is decent. Okay, we just made a fresh high. So you hit that long button. You said, I'm buying it off of support. We're going to bounce back. I know there's a technical upside gap fill. That's my target. So you're long at 40. The crazy thing about trading is that's the right move. If you took that long, that's a good trade. That is a good trade, which I know is probably like blowing your mind right now because obviously it didn't work. But at that moment in time, as of 1038, 1039, this is all the information we have, and the information suggests it is good to go long here. Unfortunately, it was a fake out and it got hammered. That's going to happen. When I say trading is 50-50, half the time it's going to look like this and you're going to feel embarrassed and you're going to lose money. And then the other half of the time, you're going to seem like a genius and it's going to rip in your favor. Where it gets problematic is when you don't get out. On this breakdown of 716, on this breakdown of 710, on this breakdown of 700, you have to get out because unfortunately, if you don't, it could just keep going. Now, do I know how it's going to go in this particular example? I have no idea. If I had to guess, I think we're going to come up, kiss VWAP, put in a lower high, and then take another leg down. If I had to guess, but remember, you shouldn't be guessing. That's in the game of predicting. You should be reacting, but that's just my random guess. Some sort of pop that gets faded, and I think we're going to go down for another leg. But once again, that's a random guess. What we can only do is based on the real-time information is if you took that long and you didn't get knocked out at 7-11 at most, what are you waiting for? If you're in it, I mean, I obviously hope it comes back for you. I'm not rooting against you, but you also tactically made the wrong decision because there was no saying that this had a bottom here at 91. This could have easily just kept going. And before you know it, you blow out your accounts. You have to behave in a manner in which when it goes bad, assume it's going to get really bad. You shouldn't be putting yourself in that position where you're like, oh, it went bad, but maybe I'll get lucky and it's going to bounce back in my favor. It might, but remember, all the future bars are going to be created by all the people who are about to trade. These are all the real-time trades hitting the market. So unless you know what they're about to do in aggregate, are they going to come in and aggressively buy? Are they going to come in and aggressively sell? You don't know what other traders are about to do. So you just have to kind of assume it's going to go against you. So that's the game, is the half the time that you're wrong, make it a reasonable hit. You went long at 740, you got knocked out at 710, you lost 30 points, you're down $600 per NQ contract. I know that's brutal, but you can survive that. And obviously, if you're trading MNQ, you're only down $60. So something you could definitely survive. But if you hold it, well, now it's worse. Instead of giving out at 710, well, now you're 20 points worse. So instead of a 600 loss, now you're down actually 1,000. And all of a sudden, the hole you're getting yourself into can get worse and worse and worse. And then to like add insult to injury, if you don't get out, well, now the trend switch, and that was a legitimate short. You could have taken this short at 97. You could either risk 711 again, or you can risk 725. So not only did you take a larger loss than you should have, but now you might be missing out on the whole new play that could easily pay off the loss that you just took if you kept it in control. And once again, please, no one take this as me yelling at you. This, if anything, I've made this mistake a million times, so I'm trying to help you guys with my experience to let you guys to know, hey, like I stepped in that trap a lot. Please don't step in it. Like I'm the person who's lost money from it. So I'm attempting to speed up the timing and lessen the pain of your learning curve because I am one fucking stubborn, undisciplined motherfucker, which in a certain sense is good because it kept me in the trading game, but it also means that I made the mistake that you should only make once or twice in your trading career. I've made it 100 times. So the same personality aspects that has allowed me to continue with content, to continue with trading, it's also sometimes like the bane of my existence because I don't make a mistake once or twice. I'm the person, like a good scientist, I need to make sure that that mistake is still a mistake. So I tested another 99 times to be sure. I was the kind of kid who I didn't really believe it after I burned my hand by touching a hot oven. I had to keep touching the hot oven to make sure the laws of thermodynamics didn't change in the in-between. So please heed my advice on this of it always comes down to risk management. And this is coming from a guy who disrespected his risk management. I don't like literally, there's not a number. It's a new form of infinity. So, hey, if you don't want to believe me, have at it and feel free to DM me that day when you're so emotionally distraught and beat up from blowing out for the 19th time that you're like, Matt, I think I finally realized I need to respect my risk. Or you could just take my advice right now and realize that not only should you have gotten out, but you missed out on a good entry. And right now that's a break-even trade. But as soon as this pukes below 83, you can move your stop to break even and then you have another runner. Just like that. Yeah, I think I listened to you. At least you actually make money with trading with proof. I mean, that's the only way to do it. There's too many people in this world who don't. I mean, honestly, like, what other people with a following actually show proof? I have to give Lanto Trades a shout out because he did just post proof of him taking money into his account. So, like, to me, like, he's doing something to try to show proof there. For a long time, Rips was showing his daily results, which that was proof, and he was doing it on a live account, so you could actually track his trades. So to me, I'm not saying that I'm the only honest person in this game, but what I am saying is the amount of honest people in this game you can count on one hand. Like, really. There's too many people who are trying to shove their class down your throat, and they don't have any proof of profitability, of payouts, of risk management. It's always just trust me, bro. It's disgusting. And I don't know, Trey, Tom, come on. No, I mean, no, he was transparent. He transparently blew out all of his accounts. I didn't get knocked out down at 7-Eleven, but I did slip on some spilled coffee. It happens. Feels like you're literally talking to me this morning. Tesla burned me. Thanks for all the pep talk. Much needed. Hey, dude, we're in this together. I'm happy that it helped you, but once again, it's not... I don't mean to admonish any individual person. If I'm admonishing anyone, it would be myself, because I've done all of these mistakes. I've made as many mistakes and missteps as you possibly can in this game. And I guess I'm just trying to walk everyone through realistically and more of the math side of what it means when you're choosing to do those things. Every single time you are choosing to let your risk go a little bit more, you are opening the door to legitimately blowing out your account. And eventually, you will. If you keep doing that, eventually the bad beat will come and you will lose your account. Patrick Weiland, you're asking me if he's a real trader or not? I mean, literally just go watch his account, just go watch his content. I mean, some of these people, all you have to do is consume a couple minutes of it and see how they talk about the market, see what their knowledge of the market is, and it's pretty self-explanatory. Also, I took Matt's advice and did 58 floors on the stair stepper. Helps my trading. Hell yeah. The best traders are the best stair steppers. I'm getting to the bottom of fraud. I can't even show this to you, can I? If I go full, can you guys see this? How do I get it? Something just got announced. The market's going crazy, but more important you guys can kind of see it a little bit there. See how it says I did 200 flights and 3,400 stairs? You see that? 200 flights right by my thumb and 3,400 stairs. Well, folks, I think we have an evident acknowledgement of fraud. 3,400 steps by 200 flights. They're saying it's 17 steps per flight. They're saying it's 17 steps per flight. 3,400 steps divided by 200 flights. It's not right. How many steps in a flight? 16, folks. 12 to 16. They're not even going up to the realm of 17. It's fraud. And I know a lot of you might just think that this is a joke, but if we let this level of fraud go now, when does it stop? When will justice be found? I'm just saying, if we don't stand up to this particular injustice, what are we going to allow murder next? It's a slippery slope. We either need to right society at this moment, or we just completely devolve into chaos. You guys can pick. Trump did not say anything. Yeah, obviously the news, something came out. Let me see if I can track it down. That's not it. Okay, I'm looking for any breaking news. Breaking, Trump, highly unlikely I'll extend ceasefire with Iran, 47 seconds ago. Once again, update from President Trump, highly unlikely I'll extend a ceasefire with Iran. So, coming back to this trade that we were talking about, reasonable short at 97. The risk was either 711, 725. 725 never got knocked. If you got knocked out at 711, you had a re-entry here at 709. And at one point, it went up 100 plus points. So right there's an example of, you took a 30-point hit, but then you just made 100 points. So obviously you're up 60 and you're done for the day. So looking at this, or dumb strategies that people are trying, you can't predict. You cannot predict that the market was about to do this unless you know Trump was about to pop off. But even then, even if he was going to pop off, you don't know how the world's going to react to it. It's just something you do not know. It is, hang on. It is something you do not know at all. Right here. Once again, just because I said it was a reasonable short at 97, you could have either risked 711, a little too tight. 725 was better. If you got knocked out at 711, your re-entry was right here at 710. If you were risking 725 and never got knocked, and you could actually add another contract at 709, and then it just so happens that we vomited all the way down to 610. So even if you took that long before that we were talking about, this long at 40, and you're knocked out at 710, you're out 30 points. But guess what? You just are now, you made 100, so you're net up 60. That's why, like, when you were wrong, you not only need to get out because the loss might get worse, but you have to get out because you also might be missing out on the next best play. So it's kind of a double-edged sword. When you are not respecting your risk, not only are you potentially taking on a larger risk than you should be taking, but you might be missing the next play, and that might be the real trend of the day. Who's trading Stone today? I assume probably more than than most people would admit. Mag 7 just got hit. It's not recovering. NASDAQ took a hit there too. SPY, yeah. So trend is now down with respect to options flow. 5-minute did crack. 10-minute is testing. 30-minute, guess where we bottomed out? Perfectly at the 30-minute 50 EMA. 5-minute crack down. 10-minute is cracking. 30-minute. So we're about to be switching trend. Below 680 and below 125. Honestly, and we're now at 7,100. All right. We are breaking the transition zone. We're breaking the psychological level. Do I want to trade this? I like it short. I do like this short. You have obvious risk at 81. It's not that bad. But I'm also already up 1,000. Like, I don't even know if is it worth it? I mean, I could catch this vomit down to 600 if it goes. That's another $1,000. I don't even know. Do I want to be involved? I mean, it's a good trade from a risk reward perspective. It's just for me, I mean, I'm already up, you know? Like, it feels like it's a little presumptuous of me. The reason I'm questioning it is because the 10 and the 30 haven't actually broken yet. The 10-minute, if it closes here, will break in 3 minutes. The 30 actually saved itself. This is right here is why I'm a little bit hesitant. That's the only thing that I'm like not in love with. Options flow, NASDAQ's getting hit. Mag 7's getting hit. S&P 500's getting hit. Yes, these are all getting hit. So options flow is bearish. 5-minute, bearish, breaking down. The rest of these a little questionable. Is the 10 going to break? Is the 30 going to break? Is the 4-hour going to break? On the NASDAQ, the 5 did break. The 10 technically broke, and the 30-minute, same thing. It's not going to technically break for another 3 minutes. So that's like why I'm a bit hesitant right here, because I'm not loving the alignment. So if I did take this short, I'd probably be super aggressive with moving my stop to break even. But this breakdown here at 47, that was legitimately a good trade. Also, if you're still holding along after this whole thing, what are you doing? What are you doing? Like, at this point, you're hoping, and I guess for your sake, I hope you get magically right here, but it's not looking the best. Not looking the best for you. But remember, when it comes to skill and luck in the world of trading, it's a lot better to be lucky than it is skillful. There's definitely an aspect of luck to this. Definitely an aspect of luck. That's not a bad short either. Not a bad short. All right, we definitely don't need that all the way up there. Oh, do I want to do this? I could trade it on just the evals. I do have 3 evals. But why? You know? To what end? To what end? I think that is a good trade, though. I mean, it is a good trade from a risk-reward perspective. We just put in the lower high. We're pushing that trend line. First target, 600 flat. We were talking about it at 650. That's $1,000. Where are my evals? 81. Uh, 81. All right. 81. I guess if I want it, I'm not gonna, I mean, I just have evals and evals are evals, so like whatever. I'm in no position, but it's just down. I just wanted to be a little convinced, and I guess it's good that I waited because we do have these lower highs, but we have these higher lows. Or do I just want to call it a day completely? Once again, if I trade, I'm now just going to do it on the evals. I have 1, 2, 3 evals. The rest are funded. Well, actually, these are live accounts. These are funded accounts. These are funded accounts. And then these 3 are evals, which I could make another 3.5 on them today because they're allowed to run up to 4.5. Oh, brother. And it's just 11. All right, let's see. Where did those 30-minute bars close? 5-minute went bearish. 10-minute went bearish, but it's testing 30-minute tagged. 5-minute bearish, 10-minute bearish, 30-minute bearish. Which way does this want to go?
Order filled.
All right, we're going to take this short with size just for the fuck of it. I'm, once again, to be very, very clear here, a little bit more of a degenerate play from me because I am trading on just the evals. I would not be randomly short 3 if I was trading on all my accounts. Just like, I want to be very, very good, like clear. It's an extra degenerate, 3x degenerate play because it's just these evals. And what we're going to do is
order submitted.
Try to lock in 1.3K there, 2 of the 3 contracts, and then I'll have a runner. Definitely going to chop till tomorrow because of the whole Iran ceasefire. Bold prediction. I would be very careful about using words like definitely when it comes to trying to predict what's going to be happening in the political arena, the economic arena, or the market arena. The only time I would actually use the word definitively is by saying something along the lines of you should definitively not be using the word definitively, or maybe like you will definitively eventually blow out if you don't respect your risk. Stop loss. Yeah, I mean, like I said, it's just these evals. How much do I care about this play? Nah, fuck it. I don't care. It's just evals, folks. It's above my head. You can see these 3. This is a little bit of a Monday degenerate play. I might add to it for all I know. You know, let's get crazy with it. Let's get crazy with it. Let's get crazy with it. I'm definitely rock hard right now. My SPX puts are loving the tension. Jesus. That's one way to trade. Here I was worried that the worst situation in here might be someone who's just high, but we got someone else getting a little nuts on us. Oh, okay. Remember on these evals, they do have a 50% consistency. So the most I could do is 4.5. So I still have room to run because we're only up 2 right here. And that'll lock in 1.3. So that'll bring me to 2.4. So the final contract, I could run for another 100 points and still be good. But I'm just targeting 100. Come on.
Order filled.
Boom.
Order
Oops.
filled.
I meant to hit free trade. Fuck it. Okay, I accidentally messed up. Whatever. Fat finger mistake. You guys saw me. I accidentally click on close and I accidentally clicked free trade. So that's on me. But whatever. So I got out of everything. 3K, 3K, 3K. Whatever. Like I said, a little bit of a degenerate play in terms of sizing. The play itself, I mean, I explained it to you. I sat here for minutes saying this is a good trade, this is a good trade, and then I took it. So I guess if you missed that one, that's kind of on you. My mess up was I accidentally hit close instead of free trade. I was trying to go stop to break even, but it accidentally closed it out. So whatever, I'm done. 3K, 3K, 3K. Can't complain about it at all. I guess the only thing I could complain about is for how much I was explaining that play. I could have taken it on all my accounts, and then all of my accounts would have had 3K, which would have been sick. But whatever. Coulda, shoulda, woulda. There's no crying in the casino. So pretty solid day, all in all. We're going to be wrapping things up here so I could go do the teachings I need to do in the Discord. So before I let you guys go, you saw all the trades today, the explanations, all that good stuff. So, of course, if there's follow-ups, let me know if I lost anyone along the way. Let me know if you guys need to know more about the fraud that is currently being perpetrated in the stair-stepping community. Fucking 17 steps is not a flight. It's not a flight. What's the total P&L? Let's see how much money we made today. Let's see how much money we made. Working. It's like Britney Spears right now. 31. Can't complain about it. 31 relatively non-stressful dollars. Sure. Let's see what we made per account. Account type, I should say. Damn. This is exactly why I wish I hit the free trade button, because right here, the stop would be at 33 and I'd be able to play this breakdown. But it was a fat finger mistake. I tried to explain to you what I wanted to do. Take profit, I made 13. So really I made 4. 4K on the funded. And then all the rest are funded or live. So 5.5, 5.5, 5.5, 1.1. I only did 1.1 on Legends because that's all I needed today to secure a 12.5K payout. So I will be requesting a payout after market close. Grand total, 31. How much of that? 31. So 21 was live funded money. And then 9 of it was on evals, if you guys needed to get that breakdown of what happened. But before I let you go, today is you have 1 day left, 1.5 days left. Use that code Goonie on Apex. End of day drawdown, no payout denials, no MAE, no 5-to-1 risk to reward. You can still pass in 1 day, and right now with 90% off with code Goonie, pretty solid day to attempt to pass that test in 1 day. So pinned to the top of chat in the description of the video. If you want to trade with me, get mentored by me, just be part of the Goonie trading community. A lot of great like-minded traders trying to attack the market with actual stats, like actual risk management, not some bullshit models. That's what we're all about. So feel free to join up, GoonieTrading.com. Of course, if you have any questions, comments, or concerns, just come to the contact page and that will directly come to me. Folks, that's what I have for you. I appreciate all the vibes. Thank you, thank you, thank you. Solid start to the week. Please be mindful. There are gaps to the downside. There are gaps to the upside. There are apparently gaps everywhere on the chart. And right now, SPX, the gap to the downside is 7051. And then please don't forget that there is a gap to the upside on the futures market to 7164, which is pretty much the closing value on SPX. So if you need a rough equivalent, this is SPX not working again? Oh wait, no, that is. Huh? Is this moving? Oh, right here. Sorry. I didn't realize I was on the 30-minute chart. So if you need the rough SPX equivalent, it's like 7125, just so you guys know. So couple gaps to pay attention to. Obviously, look at options flow. It is not the most bueno this morning. And momentum's actually switching. 5-minute broke down, 10-minute broke down, 30-minute is testing. 5-minute broke down, 10-minute broke down, 30-minute broke down. So the one thing that might save this right here is this 30-minute on ES if it starts to bounce. Like, that's not the most insane thing. But if this one also starts to go, well, that's when it becomes reasonable to look at the downside gap fill at 7051. So just wanted to call that all out to you folks before we ditch for the day. I'm going to go hang out in the Discord. Happy Monday. Hope you guys had a great weekend. Hope you made a bunch of money today. I feel like we had some really spot on calls. And honestly, as much as we were bullshitting and it was kind of calm today, we made good money. And sometimes that's what trading is. And in fact, I find that sometimes the best trading is actually just like calm, realistic things like you saw today. I know sometimes it's fun to get hooting and hollering and having fun and ripping it and crazy movement. But today we kind of just sat there patiently, waited for a solid setup. And when it showed itself, which was 90 minutes into the session, crushed it. Made 9K off that extra one. So the patience, in my opinion, was well worth it. Once again, thank you for all the support. You guys are fucking awesome. Thank you, thank you, thank you. Don't forget to check out Apex. Use that code Goonie, or if you want to trade with me, GoonieTrading.com. We'll be posting content later on today, and then we're going to be streaming once again tomorrow morning, 9 a.m., bright and early. I hope to see you there. Peace.